Hello, everybody, and welcome. It is Wednesday, July 22nd. You're coming live with Leon and I, Brent Simpson, to talk to you about investing. Today, we're talking to you about something very specific. We're talking about why ESG investing is different than socially conscious investing from years past. Some of you all may be thinking, what is ESG? We're going to talk about it during this particular live. If you have questions, please get ready to just send them in. If you're listening via the podcast and you want to get in contact with us, www.ieapodcast.com. Go to the bottom and you can submit questions there. So, Leon, when we jump in, do you want me to tell them what ESG is? Do you want to tell them?
No, I'll jump in. So, so ESG stands for environmental, social, and governance. And basically what it is, it's investing in companies. So like Brent said, so like the title of this says, so some people may know the term as social investing. And social investing is primarily where a company was basically socially responsible. In other words, they didn't have that. So social investing usually means like things like people won't invest in things like tobacco or guns and things like that, or companies that hurt the environment. So that's typically social.
And also, Leon, one thing to note is that when we talk about the old way of thinking of socially conscious investing, it was normally the retail investor that pushed the agenda, not the institution. So it was a movement of the individuals to say, we only want to find, and a lot of times they have to find the companies that fit the profile because it was hard to find. So just know when we're talking about this, it's a difference between the people who are institutional money pushing versus the retail investor.
Well, and actually, it's actually similar now because ESG is actually being pushed by primarily millennials and Gen Z. So these are the groups that grew up. So millennials covers like Brent and I, like kind of like mid 40s ish. Like I think it's like
no, we're Gen X. We're Gen X. We're Gen X.
Sorry. No, we're Gen X. Sorry, we're Gen X. So this is being pushed. Yeah, I know, right? It's being pushed by Gen X and wait, millennials. So there's being pushed primarily by Gen X, millennials, and Gen Z. So Gen X covers Brent and I up to about 40, like 20 to 40 or 30 to 40. Then you have millennials and Gen Z, which I get kind of confused about, but I think it's like 18 to like high 20s. But anyway, it's basically young people and kind of like middle-aged people that are pushing this. And these are the people that grew up very socially active, very socially conscious, and they care about the environment and they care about the companies that they invest in. They actually would be somewhat involved with. So with ESG investing, people are looking for companies that one is E for environment. So they want companies that are not harming the environment in any way, shape, or form. So a lot of times that eliminate companies like natural gas companies or oil companies. Social is typically companies that are doing things, like I said, socially. Like for instance, like right now, the Black Lives Movement is really big. It's a really big social issue. So companies that are really behind that, these ESG investors will really begin to look at it. And then third, governance. So governance covers things like how is the company structured? Do they have women or minorities on the board? Are their policies stockholder friendly? So that's what governance really covers. So those are the three big ones for ESG. ESG, like Brent said, social conscious investing has been around since investing has been around. ESG is a little different in that it's not really about what the company. So before it used to be about what is the company's product or service, right? So an example is, so say a company makes like table legs or whatever. Before that wouldn't be looked at as a social conscious investment because all they were doing was making table legs. Whereas if it was an oil company, they'd say, okay, I don't want to do that because they could be potentially messing with the environment. The difference now is under ESG, a company that makes, say, table legs can be an ESG investment because if they have a policy where, in their production process, if they make sure that however they make their tables doesn't hurt the environment, they have something laid out that says how we're going to protect water, how we're going to protect the environment, how we're going to protect our runoff. The other one being social, say they joined the Black Lives Matter movement really hard, right? And then say on the governance side, let's say they had minorities in a position of power, and they were really shareholder friendly. So that's how ESG kind of differentiates from socially responsible investing. So any company can really be under ESG, whereas under social, it was more about what the company's product or service was. So this chart that we have up here, slide one, not chart, this slide just shows just give you the definition of basically what ESG is. But I want you to mainly look at the 2 bullet points. And this is where it kind of gets down, okay, how can we benefit from this, right? So this is where the money comes in, a portion of the money comes in. So a study recently by HEC Paris Business School, they show that investors are willing to pay 70 cents more per share for a company giving $1 more per share to charity. So what that means is, what they're essentially saying is that companies that give to charities, investors are willing to pay 70 cents more on. So they're willing to pay more money for it. Now you may say 70 cents is no big deal, but that's 70 cents per share times the number of shares. So if we're talking hundreds,
that's 70%.
No, 70 cents.
Yeah, is it per share or per dollar?
Per share.
Okay.
Yeah, it's per share. So, but if you look at it from the bigger standpoint of the 70 cents per share, if you're talking about hundreds, thousands, or tens of thousands of shares, that adds up. That's real money, right? So investors are willing to pay more for companies that are doing charitable work. Now, conversely, the other side of that, the other portion is saying that firms exercising negative social impact were valued at 90 cents less per share than those considered socially neutral. So what that's saying is basically companies that were showing no social impact were valued less by investors, right? So that's showing that investors are really looking for companies that are doing this ESG model, that have doing things for the environment, doing things socially, and have good governance. So that's actually in dollar terms. That shows how ESG is actually affecting dollars and per share investing.
And for anybody listening to the podcast, then let me just jump in and make sure they understand what we're talking about when we talk about the slides. Right now, we have a slide, and it's just really talking about ESG investing and showing the definition that ESG stands for environmental, social, and governance. And then it goes on to talk about ESG investing and the description, the one we gave you earlier, that is investors actively look for buying opportunities in companies that have demonstrated positive environmental, social, and governance policies and actions. The 2 bullets Leon is referring to is a recent study out of HEC Paris Business School. It showed that investors are willing to pay 70 cents per share more for a company giving $1 more per share to a charity. And then the second bullet is talking about firms exercising a negative social impact were valued at 90 cents less per share to those considered socially neutral. So so you can follow along, that's the slide. That's what we're talking about now.
Right. And those 2 bullet points are the main points of the slide, because again, it shows the actual dollar impact of ESG investing. It actually has an actual dollar amount assigned to it. And it shows that on the positive side, companies that engage in ESG investors are willing to pay 70 cents more per share, and companies that are not are valued at 90 cents less. So that's a very big tell as far as how investors feel about ESG. All right, Brent, if you go to slide 2. Now, what this slide is showing, this is showing the growth of how ESG is going to progress, supposedly, theoretically progress over the next few years. So this slide is showing starts in 2012 and it goes out to 2025, and it's showing how much money in the U.S. is under management by firms, and so it's in the trillions of dollars, right? So in 2012, there was $33.3 trillion under management in America, and at that time, 11%, or that's $17 trillion, were assigned to ESG. So 11% of investments managed in the U.S. were assigned to ESG, 11% in 2012, right? So if you just look at the chart, if you go out 2014, that jumped to, sorry, take it back. 2012 is $3.7 trillion, $3.7 trillion out of the $33.3 trillion, which makes up about 11%. 2014, it jumped to 6.6 trillion. So it doubled. Remember, this is the money that's assigned to ESG. 2016, it jumped to $8.7 trillion. And now, if you look at 2025, roughly $34.5 trillion is going to be assigned to ESG investing. Now, to put that in perspective, that's going to be 50% of all money that's managed inside the United States is going to be assigned to ESG investing. So again, what this says is the people that are driving this again are the Gen Z, millennials, and Gen Xers. It's basically the new wave of investors that are coming behind our parents, which was us, and then those younger than us, and kind of that 30 to 40 range. And they've made it very clear this is a very, very important thing to them. Another thing also that I read about was how fund managers, now that are being hired out of college, that are in their 20s and 30s, are bringing this into hedge funds or bringing this into banks, and they're making a big deal out of this. They're saying, look, their friends, their family, and themselves are really worried about ESG, really worried about the environment, really worried about social justice. So this is not at all a like corporate thing. It's really a grassroots thing coming from the ground up into the halls of these financial firms, where ESG is now being pushed by basically the bottom up. It's the bottom. It's people like us pushing this, and then also fund managers who are roughly in our age group, maybe a little younger, who are now saying this is very important to them. So again, just to see the progression, in 2012, 11% of invested money in the United States was assigned to ESG. By 2025, that's going to be up to about 50%. And we're talking $70 trillion. So half of that, about $35 trillion, will be assigned to ESG. Now, what does that mean for us as investors, right? So what that means is we're going to start seeing a shift. And there's actually been one that I've seen lately, I've noticed lately, in oil and natural gas companies. Natural gas or energy, the energy sector is the worst performing sector over the last 3 to 5 years. I think in the last 3 to 5 years, it's down like 44%. And that's reflected, that's basically kind of the movement of, like you can see ESG happening in the energy sector, because again, oil, natural gas, and even mining, things like that have really come down in price and are really struggling. So what this is showing you again is how ESG is really taking a strong effect in investing. And going forward, when you're looking to research stocks, you may want to look at ESG and socially conscious companies dealing with the environment, things like that, in your investment, because a lot of money is going to be moved into that area. I bring you go to slide 3. And this is the final one. Is these are my favorites because it tells you where the money's flowing. So what this is showing you is it's just a line chart showing the basic percentage gain. So what it's showing is 2016 through 2018, and what it's giving you is percent change of an ESG fund relative to the Russell 100. The Russell 100 is basically the same thing as the S&P 500. You hear Brent and I talk about it all the time. It's essentially, quote unquote, the market. So on this chart, the Russell 100 is the market. So the light blue is the Russell 100, and the dark blue is the ESG fund. So you can see that over in the last 2 years, ESG has outperformed the market in general. So it's kind of hard to tell, but the Russell 100, the market, is up about 35%, and the ESG fund is up about 45%. So that's a 10% differential where the ESG fund has outperformed the market in general. So powerful chart. This is only 2 years. I have other stuff that shows you can go back even I think anywhere from 5 to 10 years. That has roughly the same thing. The gap may not be as big, may not be 10%, but on average, ESG is outperforming the market as a whole. So Brent, you go back to slide 1.
All right. And it's taking some notes. So if everybody sees me looking down, just making some notes.
So here on slide 1, so at the bottom, what you're going to see, so another thing with ESG, right, is it's kind of harder to find information on exactly how they're doing their ESG, because remember, ESG is environmental, social, and governance, right? So you can't really look at a balance sheet or like an income statement and see, okay, how is the environmental, social, and governance doing, right? It's something you have to look really deep into their when they report their earnings, kind of go through their numbers and see in some of their statements, see if how they're really doing the ESG. That's why in doing ESG, it's really powerful to look at ETFs. Let the fund manager do all that research for you. I'm starting to look at ESG now, and y'all know I love research, and I even found it kind of hard to find specific companies that were engaging hardcore in ESG. And one thing you can do, and Trigger Brent and I always talk about, is when you find ETFs, you can actually dissect. You can go inside those ETFs and look at the different companies inside those ETFs, and then invest in those individually because they've already been vetted by the ETF itself. So on this chart, on the bottom left, you'll see first one is Vanguard Social Index Fund, ticker symbol VFTAX, and the other one is Parnassus Core Equity Fund, investor, ticker symbol PRBLX. So here are 2. We found 15 total, but these are two of the ones that were the biggest as far as money assets under management. So I'm gonna put those 2 out there first. But we found 15, and we're just showing 2 here. So that's basically the gist of what ESG is.
Now, for a lot of you all thinking, you know, we understand, okay, people are becoming socially conscious. What's the big deal? How do you really truly make money from it? And that's what we're talking about today, how to get ahead of the curve. So if we know this is the trend that's just kind of starting to take, the wave is starting now. If you can get in front of that wave and you can start investing, positioning yourself in the market, start allocating certain aspects of your overall portfolio towards ESG investing, and then just let those companies, you know, bind the whole strategy. That's the one we Leon and I really believe in. But for you all now thinking, how do I practically apply what we just talked about? This is the practical application. We have a list of 15 plus companies that we're gonna have inside the membership platform. But for anybody interested, there are two right here that you can look at. One thing strategy-wise that you can do if you're saying, well, how do I really know which ones are good ones, which ones aren't? Leon talked about going in and dissecting the funds and what's called underlying. Each fund has these investments that are called underlines. And so the underlying investments inside of the mutual funds, you should look for trends. So if you notice that, you know, both of the mutual funds that we have listed here have, I know this isn't it, but if it was Coca-Cola, and you say, okay, I'm seeing a trend that Coca-Cola is in 3 of these funds, 4 of these funds, 10 of these funds, then number one, they pay people to research these companies already who are professionals in the space. More than likely, if you're seeing it consistently throughout, it's not only a company committed to ESG, but it's probably a strong company as well. You can still go in further. And one thing I say, we're not giving you advice directly. We're not your brokers. We're telling you to do your research at that point. When you find the companies you want to, go deeper and call the customer investment line. We talked about this a lot. Being able to, we now have the ability to call these companies and say, you know what, I want to know exactly how you're positioned, why you're positioned in this marketplace. And as Leon talked about, you have millennials coming in, and they're bringing that philosophy of importance to this issue. You're talking about a demographic that's roughly what, 72 million people. I think for us, Leon, us Gen Xers, if the cutoff is anybody below 40, but you know, when we talk about us, we still account for the biggest population group, and that's at 82 million. And so we now combine with, you know, the millennial movement and some of the baby boomers who account for about 71 million people. They still have a lot of buying power and a lot of power in your dollars right now, especially amongst all the you know, social inequalities that people are no longer accepting. They're demanding certain movements inside of the corporate America, and you can see it happening. However, it used to be, and this is no insult to anybody that may hold this position, but normally people of color held positions like HR director or director of diversity and inclusion. And now we're getting board seats. We're getting positions inside of companies at the executive level. And also when you look at women in business, that's changing as well. They're starting to get much higher ranking positions. Equal pay is still something that's being fought for, but it's coming. In addition to looking at the LGBTQ community and their movement now to not only have representation at the table of these corporate companies, but also have advertising dollars going towards their cause. And that's a huge population that will control the purse strings. And so all this goes back to purse strings, right? You know, we talk about now the movement is being pushed from a grassroots level. You heard Leon talk about that. That's you, that's the person next to you, that's the person in your network. So these are things you can start talking about and investing in. That's the future. We're talking about the future. It always has existed under socially conscious investing, but now it's packaged differently, and the dollars behind it are much more robust, which means the stock prices will follow as well. And that's what we're all about in Investing Education Academy, is how is the stock, or how are stocks going to be affected by this? So that's what we're looking at, and that's why we're saying the money is headed this way. So we're bringing this information to you in 2020, saying make sure you're ahead of this curve, because it's now. And also, as many of these smaller companies get the opportunity to go global because of the internet, where before it was just dominated by, large cap companies. That's not the case anymore. So there's going to be a lot of money movement, and we even have some information we found out that we'll bring to you all at some point about a possible new market coming out, which Leon and I still haven't completely figured out how it's going to work, but it's a completely new market that may be launching sooner than later for trading. I'm trying to say it without saying too much. Did I say it right, Lee?
Yeah, without,
right.
we don't want to say anything wrong because we could possibly get in trouble. But there's something coming that we're all going to be able to play in that's not available to us right now to invest in, and it's actually really interesting. It's really exciting, and it's not Brent and I aren't doing this. Like we just know what's coming, but we're not the one executing this. It's something that that's being done by the SEC and the powers that be. But it's coming. It's going to be really interesting, and it's something we're gonna dive deep into it inside IEA for the members that we're going to bring to them as well, and a lot of information on that. So, but last point on ESG is 2 points I really want to make is that one, go back and look at the line chart that shows how ESG has outperformed the market the last 2 years, and like I said, there's other evidence that shows it's actually outperformed over the last 3 to 5 to 10 years. That basically ESG is beating the market. So that's one main point. So it's proven to work. And the other point is on the first slide we showed how investors are actually paying less. They want to pay 90 cents less for companies that are not investing or engaging in ESG. This one here. The second bullet point shows how stocks are being valued 90 cents less for companies that are basically so socially neutral. So companies that are not investing or engaging in ESG, their stock prices are less. They're not being valued as much by investors, and that's real money. That's tangible money with investors speaking with their dollars. So this is just showing how ESG, as Brent said, it's coming, it's growing. By 2025, it should be roughly half of all money that's invested inside the United States will be mandated to go into ESG companies and/or funds. So really, really important point.
So with that being said, we all know we owe you 2 stock picks.
Yep. All right, I'll go. Yeah, I'll go first. Have you got yours yet, Brent?
That's what we're doing.
Yeah, I'm just saying, just making sure you're ready. All right, so my pick is Universal Display Corporation, ticker symbol OLED. OLED. Universal Display Corporation. Today they closed at $155.73. They were up 1.3%. So what they do is they're a manufacturer of organic light emitting diodes for flat panel displays, and a service provider to the display and light industry. So that's what they do. So a few stats on their numbers. So in the last 2 years, they've averaged a ridiculous 96% per year profit growth, 96% on average over the last 2 years, and 31% sales growth average over the last 2 years. I mean, crazy profits and crazy revenue growth. They do pay a dividend. It's basically nothing. It's the dividend yield is 0.40, so less than half of 1%. So I'm not looking at this as a dividend play. It's more of a growth play based on those huge profits they're gaining per year. But they do pay a dividend. I just want to put that out there, that they do pay a small dividend. But again, my pick is Universal Display Corporation. Ticker symbol is OLED, OLED, and they closed today at $155.73. They have ridiculous, crazy profit growth over the last 2 years, 96% per year on average.
Okay, let me pull mine up. I'm swinging for the fences on this one today, everybody. The company's name is Tilray Inc.
Oh, weed joint.
Yeah.
Yeah, okay.
So you know about it.
Marijuana company, cannabis, yeah, okay.
So Tilray Inc. Ticker symbol is TLRY. They're trading at $7.25. The thing I like about Tilray is the fact that it focuses on pharmaceutical distribution. So a lot of these cannabis companies, when they come out, again, Leon and I talked about this before, they're worrying about distribution of the actual product to end consumers or recreational consumers. It's already the deck is stacked against them. The reason I like Tilray is they're focused on the pharmaceutical side of things. And they're very, very similar. It was a company that we picked, and I don't even remember the name of it, but we GWPH. They also too were in the research side of pharmaceutical. Tilray is an actual pharmaceutical company. So I chose them. They've been showing positive growth. I mean, in March, they were listed at $3.93. Right now they're trading at $7.24, 25 cents. They're not paying a dividend, nor will they be paying a dividend anytime soon.
Right.
Anybody watching this, I want to say this is an extremely risky play. So this isn't one of those, oh, let's just jump in and put a bunch of money in. And don't look at the price. Don't look at the price and say, oh, it's only priced at $7 and some change, so I want to put everything in it. This is one of those companies that requires you to be disciplined in how you invest and only use a certain kind of money. Now, I'm gonna let Leon tell you what kind of money that is. Leon, what kind of money is that?
Good old risk capital, money that you can lose. If you lost it tomorrow, you wouldn't miss it. You're not using to feed your family. You're not using to buy your medication. You're not using to send your kids to college. It's money you could literally burn and you would not miss it.
Yeah. So they have relatively low trading volume, and in addition to which means they're more susceptible to price fluctuations, but they're down from being around $40, $50 a share. So the question is, can they recover from being down that much? And it's been trending downward before COVID. So I want to tell you, we're not always picking stocks that are just on an uptick. Sometimes we're picking stocks we believe can have a comeback. When you invest, if you decide to look further at Tilray, ticker symbol TLRY, be sure that you are in it for the right reasons and you are using risk capital, because this is a volatile play.
Cool.
With that being said, everybody, we want to thank you all for being with us. There's been great growth. We'll have a couple of people that we're going to be interviewing on our podcast for those of you all who do listen to our podcast, and everyone who has joined IEA members platform. We've had 3 or 4 meetings at this point, and they've been amazing. The questions were great. I want to give a definite shout out to Bakari Haynes. He was the first person to do Hot Seat Saturdays, in which case we have a member sit down and actually talk about, defend, answer questions, however you want to say it, their portfolio. And they actually put their portfolio out there. And it was amazing to see one of the picks inside of Bakari's portfolio that was only 5 years old was over a certain percentage in gains. Should we say it or not say it?
Yeah, I mean, it's like 400%.
Yeah, it was over 400% rate of return in this one stock. If you are an IEA member and you were there for the conversation, you know what stock it was. And to have a stock go up 460 some percent in just a 5-year period is how we lessen or eliminate if that was a fluke. Let me be honest, you're not picking stocks that over a 5-year period on a regular basis they go up 460% plus. But in this case, he shared it with us, and it was a very simple selection. And when as we go forward, Attorney Beverly Winstead has volunteered to be the second Hot Seat Saturdays participant. So in August, she'll be taking the hot seat, and we're really looking forward to Beverly telling us why she invests, how she invests, and the thoughts behind being in the market. And Leon's laughing. Why are you laughing, Leon?
Because every time I think of Beverly, she's all about them picks. So I can't wait to see what the picks of her own in her portfolio.
Yeah, so it's going to be really fun to sit down. Again, the idea is to get people talking about investing, to make it something that's not abnormal or strange to talk about. And even with those people we found who do invest, sometimes they don't know why they did it, in which case there's nothing wrong with that. But we want to start putting some type of thought process behind even loosely picking stocks. So we're trying to make the conversation something that's normal for our community. And we wish anybody who wants to participate or watch the Hot Seat Saturdays coming up in August, you can easily join IEAmembers.com and pick your membership level, sign up, and we were happy to have you. Yeah. For anybody who wants to find us, you can find us on what platform, Leon?
So on Instagram, we're at Investing Education Academy. As Brent said, the membership website is ieamembers.com. On Facebook, our Facebook group is just search Investing Education Academy. And our Facebook page is the same, Investing Education Academy. So if you search that, you'll probably see our public page and then the investment group too. You can just, like both of them.
Yes. So with that being said, we thank all of you all for joining. And one thing I should say, that for anybody who's thinking, oh, I want to join to witness the Hot Seat Saturdays, it is a discussion that's for insiders and Panther level members. So I would definitely want that to be a full disclosure. I wouldn't want you to join and then not be able to watch it and think, why can't I watch it? So that is all for today. We will see you all next Wednesday, 9 o'clock, and we look forward to really going deeper and growing this community. And we thank you so much for all the comments, the pictures that have been sent in, the words of encouragement. We truly appreciate it. And you don't have to do it. And it's very heartfelt. So we thank you all.
And it shows we're actually making a difference with people. So that's real good.
Yeah. All right. Everybody have a great day.
All right.